Hi everyone, welcome to Value. So today we're going to look at a company called Excelerate Energy. They specialize in the business of moving liquefied natural gas, and basically this company is in a prime situation where you have Europe, who is basically trying to wean themselves off Russian natural gas, and a situation that they are looking for alternative supplies, but they don't actually have pipelines to these suppliers, so hence they need a company that specializes in moving liquefied natural gas. But you've got an extra spin that, hey, some of these countries don't actually have the proper infrastructure to accept this liquefied natural gas. So all of a sudden you have a company called Excelerate Energy, who has these very specialized ships that basically can convert the liquid once it reaches the destination to the gas, and it can be directly pumped into the pipelines. Hence what makes this company incredibly interesting, because they own I think like the 5th largest fleet around the world of these ships. So basically, if you're a European country and you're in a dire need of gas, but you don't have the proper infrastructure to accept the liquefied form of gas, then basically this is the company you call. So this is why I think it's a prime time success for this type of company, because it's the right time. And also during situations of uncertainty, you kind of get paid a bit more because it's a dire need, so people are desperate, there's more competition, whenever demand's higher, pricing is also higher, hence why it's an opportunity that they could potentially earn a bit more than they are earning right now. So current pricing in terms of the last closing of the trading day was $28. We did have the after hours pricing, but I usually like to take the closing pricing for that day, because that day everyone can trade, whereas the after hours not everyone can trade. So sometimes the after hours pricing is not a true reflection. So market valuation's around $3 billion, which is all right. We can look into the stats. Like, this is the photo of the CEO, Stephen Kobos. And he's been at the company since like 2006 or something, so he's been here for a long time, which is really nice because it means you've got steady management. The company is majority owned by like George Kaiser, whose parents fled Nazi Germany for Oklahoma oil patch, who was already a billionaire before Russia invaded Ukraine and threw the global energy market into turmoil. Still a well-timed initial public offering for his Excelerate Energy, which raised $384 million, but after fees it's around $360 million. Imagine like losing 20-something million through just fees. That of course it is a large amount itself, so hence the fees are a small percentage in that situation. And it boosts George Kaiser's value net worth to like $9 billion, which makes the guy very well off. I don't think he needed that extra boost in his income, but I guess for him it's always a nice factor. So he's not doing it for the money, which is always a reassuring touch. So basically, here we go. This is more interesting. Biden's administration last month said it planned to export 15 billion cubic meters of gas to Europe this year to help countries slash Russian imports. So basically you have a US company who basically is going to be in demand because Biden's promised 15 billion cubic meters of gas, and are most likely to use a US company to move this gas. And if you're, as it's put here, Excelerate, which Kaiser founded in 2003, controls a fifth of the world's fleet of 46 ships. Okay, so they control a fifth of the world's fleet. Never mind the size, they control a fifth. So all of a sudden, that actually makes them quite interesting. In terms of like 46 floating storage and regasification units. So I explained earlier on, a regasification unit is basically basically turns liquid to gas on the ship itself, rather than basically that certain customer or country having to turn that actual liquid into the gas themselves. These guys had one ship that delivers 4.5 million tons, which is a lot, and that accounts for 1% of the total liquefied natural gas production. So LNG, if you don't know what it stands for, liquefied natural gas. Like, I imagine there's a few of you watching this that don't actually know that much about this kind of industry, so hence why I'm going to try to be a bit more basic around explaining the terms. But overall, I think you get the idea. Like, it took me a bit of time to fully understand every terminology, so I imagine you might be in the same boat. Excelerate last year, they generated $41 million, and it was on $888 million in revenue. So you basically have a company that is generating less than 5% of their revenues, which is for their net income, which is kind of really, really low. But it also speaks to how stable this business is, that the more stable the business, the lower the margins it usually is, which kind of is great for investors who are looking for a stable company. But with the opportunity that's coming up, potentially they can earn more margins, because basically Europe is an uncertainty around how they might get more natural gas. So basically Excelerate might be able to exploit that and earn a bit more higher margins than they are currently, which is kind of good for anyone buying stock into this company, that you're buying a company that's stable and potentially can earn a bit more with this European opportunity. So basically, here's another description of how regasification works. To ship gas across long distances, it needs to be cooled to negative 160 degrees Celsius, which is extremely cold, and compressed into liquid form, reducing its volume by 1/600th. So you can see why they would do it, because you're reducing the normal volume by 600 times, which is quite a lot. So it makes sense for them to reduce it into a liquid form. The process requires terminals for liquefaction and regasification process, which usually takes 5 years to build. So if these European countries want to build these facilities themselves, it's going to take 5 years, and that's not time that they have. Even if it took like 3 years, and that's not enough time for them to suddenly change, because they're in a situation where they're talking to Russia and they're going, we want to stop using your natural gas, but at the same time we don't have the infrastructure. So it creates an immediate need for a company that has these ships that actually can be in place for countries that actually don't have infrastructure. So basically EU gets roughly 40% of the gas from Russia, and according to figures from research group Transport and Environment, this dependence costs around $118 million a day. So you can kind of see why they don't want to, they don't want to give Russia that money. Like, you're giving Russia $118 million a day for their natural gas, so they're possibly trying to give Russia less money, and so now they're trying to look for alternatives, which kind of opens an opportunity for a company, certain companies that want to get a share of this $118 million a day, which is quite a bit of money, especially when you're just talking about a day. And if we go back to the part where this business did $880 million for 2021. So it's a big opportunity for this company to come in to get a share of that. In terms of the countries that are most likely to need that service, one will be Germany. Germany uses such a substantial amount that for them it's the most difficult. Then it's going to be Italy, Belarus, Turkey, Netherlands, Hungary, Kazakhstan, Poland. So you can see quite a lot of European countries are the top exporters for Russian natural gas. Like, even China, it's not even like one of the top ones. Like, you can see how what a big reliance it is for these European countries for natural gas. So there was this article that basically summed up one of their first deals. So Albania could be a gas hub for the Balkans with a new US deal. So Albania could be a key player in Europe's gas sector as a US company, Excelerate Energy, plans to use it as a way to deliver natural gas and natural gas products to the rest of the region, as the country also looks at increasing interconnectors amid a global energy crisis. So yeah, you have a situation where they're possibly looking at moving the natural gas through Albania. So I think it might have only just been last year that they actually started buying the actual gas themselves and then reselling it, so they actually get a margin off that. Previously, they would actually just move clients' natural gas from A to B, but now they actually resell it as well, so it kind of gives them an extra margin as well. And this situation, this article I found also interesting. So Albania is not solely wanting the services of Excelerate Energy because of Russia. They actually have a problem where low water levels have actually paralyzed their hydro power plants. So in Albania, they've got a really big problem with actually having a low water supply, so they can't actually generate that much energy, and hence why I've got the situation where basically they need this company even if it's not because of Russia. So you can see how stable of a situation it is for Excelerate Energy, that these type of deals they do, they're actually quite stable, and hence why, if you're an investor and you like stable companies, it also means the upside's not going to be extremely up, but it means your returns are going to be nice and steady as you go. Though we never know, like if the rates for their shipping actually goes up quite a bit, potentially the company gets a nice valuation increase along with that. But even if they don't, then I think you still get a nice steady increase over time. In terms of their business, so this was the 9 months ended for basically for 2021. As you basically as we just got the number before, 888 million was the full year, but if you want to look at the numbers broken down into 9 months, this is basically what happened here. That basically they did $549 million in revenue for that 9 months, and that was substantially above the $322 million. And then if there's this is kind of so okay, so out of that $549 million, you've got cost of revenue for the vessels to operate the vessels, it's $132 million, and the direct cost of the natural gas is $179 million. So you can kind of see where they make their margins from selling the gas. So they brought this gas for $179 million, sold it for $197 million, and hence, it's kind of for them easy money, because they can do it at like a very low risk situation where they can sign up a client, get finalizing on gas pricing that client's willing to pay, then talk to a supplier or do it at the same time, and then sign agreements at the same time, so they make sure they always earn a margin between those contracts. And you can see in 2020 they didn't actually do that. There were no gas sales because they actually weren't in that business at that time. So we can kind of see this company also changing as time goes on. But this company's been in business for like 20 years, and I've only just did that last year. So it's the company might be slow to change, or they as they go, maybe they are evolving. We don't know why they decided just last year rather than the previous years ahead of it. I think basically it puts net income around 42 million, as they say here, which kind of is a bit weird, because it kind of implied, if they say in this article they earned 41 million in net income on 888 million, it kind of implies that they were losing money on the last 3 months, which doesn't bode very well, but who knows, I guess. that, yeah, like, I think that's probably one thing you just got to be a bit wary of, that companies selling commodities potentially can lose money, particularly in a situation of uncertainty. But apart from that, like, it looks like this company's in a good situation. Its net profits were much higher than last year anyway. Last year for the 9 months it was 24 million, and they managed to increase that to 42 million for the 2021 9 months. So overall, you've got a company in a steady situation. They're not earning like terribly high profits, but it's a decent profits, and it's increasing as it goes. So I think that's the one thing about this company. It's nice and stable. There's a rising opportunity in Europe, so hence why the company looks interesting to me. Let me know your thoughts. Like, do you kind of like find this company interesting? Would you invest in this type of company, or are you looking for a much more higher growth companies? Because of course this company is not the most high growth, but it's an alternative to other different higher risk companies. Because high risk companies, you risk losing money much more, but you've got low risk companies like this who are low risk on the face of it, but potentially you have a situation where they could be earning higher returns in situations of uncertainty, particularly with Europe. But of course we need to analyze the situation as we go. It's hard to guess these things sometimes, but even if they don't get a substantial increase in income from Europe, they will still be in a very steady situation. Hence why these kind of companies sell at a higher valuation multiple versus their net income. But they have been increasing their net income by a good amount, and they just raised about $360 million for more growth. So you're buying into a very steady company that is looking to grow a bit as well, which is like this kind of best of both worlds. So I think this is one of those companies that's worth buying into. But at the end of the day, don't expect to see really high multiple returns, but you'll get some decent returns, I think, from this one anyway over the longer term. Like short term, it's hard to say, because these kind of companies more or less go for longer term situations, just to make sure all the outlook is quite steady. I think that's all I have to say. Apart from that, good luck investing, everyone.